Aussie. So we talked about the big level that was hit last week, right? That low from November 2020. Very short-term hourly chart. Look at this nice little impulse on the upside. So I'm looking near term, as in like the next, let's say, week out or so. I am constructive against that 69.90 low, and I am looking at 70, 60s as support for today, probably with FOMC, right? 70, 67 is the 618. Get the spike low at 70.62, 72.90, probably next level for possible resistance. Let's see where that volume weighted average price level is. So that's another thing. We have broken it, so do be careful up here. Another thing, I've been talking about this for like 3 days in my updates, is we have this rip higher in Aussie, right? Holding up pretty well, consolidating from the top of this little move. But Kiwi has indeed dropped to a new low. This is my little arrow action from the updates. And we've been talking about this, anticipating it even, that a lot of times you will see, and I think I even talked about this last week in this webinar, you'll see Aussie and Kiwi at turns, they will non-confirm, right? Or diverge, right? There's a non-confirmation. What that means is one of those two currencies, assets, will make a new low and the other one won't, or make a new high and the other one won't. Like I say, it's like Dow theory for commodity FX. So you see it happen all the time, okay? And it's happening right now. So just because Kiwi's making a new low right now, obviously, and Aussie's not, does not mean that Aussie can't go make a new low. That's not what I'm saying. What I'm saying is we're at a huge price level in both, okay? Again, the 69.90, which was that November 2020 low in Aussie. We also are 30 pips away from the 38.2 retrace in Kiwi from that March 2020 low. All right, so again, huge levels. That's nice. Also, you know, what appear to be, you know, relatively mature patterns in terms of just like look at it. You don't need much of a, you know, a practice or training in Elliott just to kind of quickly look at the decline from, excuse me, from the October high, okay, in order to count kind of 5 waves down in the subdivisions, right? We've also got a channel here. So there's a lot to, you know, from a technical perspective, to suspect that, you know, we could bounce, right? Or just react to the market, that's all. Or the market will react at the point. So when you know, put all that in a petri dish, you know, then it's okay to kind of, you know, anticipate the non-confirmation or diversion. So let's see what happens today, of course. But, you know, in a perfect world, from my standpoint, what would happen is you get an initial reaction of dollar strength, and you would get a spike lower in Aussie and Kiwi would hit 67, and Aussie would hit, what's the level I said? Where's my Kiwi chart over here? 70, 60, and then they would reverse higher, okay?